I'm doing very well, thank you. Adam, you've had your eye on the retail stocks and the earnings being reported. Give us an upshot. What's the view now, and what's it going to look like soon?
Yeah, sure. So what we saw this week, a ton of retail stocks from Target to Walmart to Lowe's to Home Depot reporter earnings. And the big standout winner for me was Target, ticker symbols TGT. And Target had reported, big monster numbers. They had great online sales. The stock gapped up massively yesterday, hit a new all-time high, and also the stock has been just on a tear. Now, other retailers like Walmart, WMT is a ticker there, also reported numbers. Home Depot, HD, and Lowe's, LOW, all reported earnings. And so far, outside of the short gyrations a day or two after earnings, what we're seeing when you put all the pieces together, that the consumer is strong, and consumer spending makes up 2/3 of the economy. And so far, this thesis that the market's going to rebound, the economy is going to rebound, things are going to get better, and things are improving, is being supported by these big retailers and their earnings over the last few days.
Sure. So the numbers we're seeing now basically are a reflection of activity in the second quarter, correct?
Correct. It's for the second quarter. It's for the quarter that just ended. And what we're seeing now is that a big shift, almost a cataclysmic shift in the way the consumer behaves. In other words, they used to go into these big box retailers. They used to buy things, or not even we, because we're consumers as well. But now what's happening is we're shifting our purchases online. So instead of sometimes we go into the stores, there's no question, but I could tell you from my own experience, it's an 80-20. 80% of my quote unquote shopping is done online, and 10 to 20% are done in store if needed. Otherwise, I try to do everything online these days, especially because of COVID in the last few months, especially during the second quarter with all the uncertainty, ... But the big box retailers, the one thing to keep in mind, everyone's talking Amazon, 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 but the big box retailers, what they have, all of them have websites, and they all have e-commerce, and they all sell things online. And that's been reflected in their earnings for the second quarter.
Sure, you bet. So that's interesting. So really, people who were staying home and social distancing were shopping, at least in large part.
That's what we're seeing. Not only they're shopping, but they're continuing to they're investing in their homes, and Home Depot and Lowe's are great beneficiaries of that. Other stocks that have done well too are what I call the real estate, the second ring or the second circle of the real estate play, like Whirlpool, for example, or Maytag, or you've got Sherwin-Williams, or so on and so forth. The ancillary stocks that do well when Home Depot and Lowe's do well. Consumers, people all over the world, really, or all over the country at least, are spending a ton of time at home. For a large portion of them, they're making money in some way, shape, or form, whether it be from a subsidy or from some kind of income, or they're working from home, but they're home all day, and they've got money, and they're spending their money on home improvements, whether they wanted to get to that kitchen, or they wanted to get the deck built, or they wanted to do what have you. What we're seeing now is a lot of money is being reinvested into their homes, and that bodes well for those kind of ancillary stocks that we just mentioned. Look at lumber liquidators, for example, ticker symbol LL. I mean, lumber prices have shot up, but lumber liquidators, liquid LL, lumber liquidators, has had a huge move over the last 6 to 12 months. I mean, just absolutely phenomenal move. It's gone from the low single digits, from under 10 to almost 30. And
Sure.
that's not Aunt Mary and Uncle Bob, or Aunt Jane and Uncle Joe doing the buying. That's the big heavy hitters. The big institutions are the ones doing the buying. And that tells you that the projections going forward are optimistic for both Main Street and Wall Street.
So who are the losers in this equation? If the big box stars are catching the bid, and as a result of their record earnings, then who is suffering?
So what we're seeing now, the stocks that are underperforming are the stocks that are really directly impacted by this whole stay-at-home phenomenon, if you will. So you've got the airlines, you've got the cruise lines, you've got a lot of the hotel stocks, the hospitality stocks, the travel stocks that they haven't really come back to life yet. And the caveat there is the word yet, because at some point in time, they will come around. They will do well. We will get back to normal. It's just human nature. Humans are social creatures ever since the beginning of time, we've always congregated in groups, and we travel. So it's going to happen. And the world, if you look back historically, even though it's really bad right now and there's no end in sight and it's easy to get very fearful, yada, 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 the point is every pandemic in history has passed. Nobody knows when it will pass. No one knows how long it will pass, but we do know eventually this thing will pass. And when it does, those stocks that have been beaten up, like the airlines and the cruise lines and the hospitality, the hotels, so on and so forth, they're going to just come out of these, they'll have new bull markets and they'll come out of these depressed states, almost like a ball. When you put it underwater, it just shoots up, or a
Sure.
spring, a coiled spring, right? So it's the same thing. The biggest moves happen early in a bull market. So those sectors are still in a bear market, but once that bear market's over for them, and we have a sign of recovery, and we're going to be going and traveling again and going to airports and hotels, you'll see these stocks that have gotten hammered come right back to life, and they'll double, triple, quadruple just to get back to even. Would be a huge move for many of these stocks.
Okay, so if the COVID have stocks are the big box stores and retailers, and the COVID have not stories are the travel related companies, is now the time to start accumulating these out of favor companies while they're so beaten up? Is this the bottom in that sector?
A lot of that has to do with timing. I mean, at this point in time, could you begin taking a position? Sure, if you're so inclined. Again, it's your decision. My view is that I want to wait for price action and volume action to confirm that thesis. It's just like a scientific method. You have a hypothesis, you test it. If it works, great. If it doesn't work, you test a different hypothesis. It's really that simple. So right now, the view is eventually we're going to come out of this. Do you want to load up now and sell all the winners and go into the dogs right now? Not ever, not 100%, because it may take more time and price before those stocks bottom and do indeed come out of the bottom. But am I watching them? Am I waiting like a sniper, waiting for that time, the timing to be absolutely right, or a comedian telling a joke? The timing is so important. As a trader, the timing is so important as well. So I definitely want to wait and see and watch for some confirmation that that hypothesis is indeed happening and unfolding in real time. Once you start seeing those stocks begin to move, then you can start getting in. And then as they continue going up, you'll just be like, okay, we caught it nice and early.
Sure. So is it safe to say that the hesitation on the part of investors to enter into those travel related stocks now, is it connected to the fact that there is still some uncertainty as to whether we're going to see a real significant increase in the infection rate with the onset of flu season come September, October? Is that the sort of the offsetting thing that's keeping everybody sort of sitting on their hands in that sector?
That's a huge unknown. You have that, and you have, I mean, look, markets don't like uncertainty, right? That's a tremendous amount of uncertainty. Another massive amount of uncertainty is the election. A lot of uncertainty revolves around when a vaccine will show up, and then how effective will that vaccine be? And then more importantly, will the actual threat of COVID over time, whether it's herd immunity, mass immunity, whatever word you want to use. So there's a lot of unknowns. Even with all these big, massive unknowns, most of the market, look at the Dow, the S&P, the NASDAQ, what have you, are ripping. The S&P just hit a new high this week. The NASDAQ's already at a new high. The NASDAQ 100 is at a new high. The Dow and the Russell are playing catch up. So under the surface, there's a tremendous amount of optimism that we are going to get past this. Yes, we are entering flu season. It's getting cold already in parts of Canada and other parts of the northeast of the U.S., around Maine, New Hampshire, so on and so forth. And it's August, but we're dropping down to the 60s, for Fahrenheit, or the 20s in Celsius. And you're in a situation now where, wait a minute, we do know flu season is going to hit nonetheless over the next 3 to 12 weeks, if not longer. And that could increase the number of cases. We've already seen some of the schools open up, like the UNC or University of North Carolina or Notre Dame, and a lot of cases just sprung up out of nowhere because kids are hanging out in the college dorms and they're doing the parties, whatever's happening. Point is that the cases are going up. So yes, there's a massive amount of unknown with respect to what's going to happen during flu season. The market is a forward-looking mechanism. I think for now, the market's expecting more of the same.
Mm-hmm.
This not half pregnant, but this kind of, hey, we're open for business, but we're not fully open. But there's money flowing. As long as the money's flowing, the economy is going to continue, presumably most of the economy at least, do well, and that should bode well for most of Wall Street as well.
Sure. The news has been pretty strident about this new Malaysian mutation of the virus that they are calling up to 10 times more infectious. And in large part, I mean, to me, that sounds like just a little bit too sensationalist, hysterical, which is to be expected of mainstream media in a large part. But do you really get the sense that there is a high degree of risk to the entire equation from the potentiality for mutations that might cause virus under development now to be less effective when they finally hit the market?
It's a great question. So anything is possible is the answer. I'm not a doctor or scientist, so I can't give you super detailed answers, but I can, as an investor, put the pieces together and connect some dots. So first off, what we have seen now, let's look at the facts. In Wuhan, China, where this whole situation began, they literally just last week had a massive pool party, and I can't make this up, where 15,000 people all congregated, had a huge party, and that's that. Now, why did they have a party? Supposedly, now this is all supposedly based on what we're being told, that there have been no new cases, zero, in Wuhan since May. We're now almost in September. Zero cases in Wuhan, where this whole thing originated. Riddle me that. As an investor, stepping back, right? Something doesn't make sense here. Now, all of a sudden, like you said, there's a new mutation of the virus. Okay, is it possible? Sure, anything is possible. But from my standpoint, I just want to see, you have a 97% or so recovery rate with this COVID situation. Yes, it's bad. There's no question. I don't wish it on anybody. It's awful. Should we take precautions? Absolutely. But we're in a situation where, do we grind the economy to a halt yet again out of fear of potentially something may happen? We have a lot of cases. Guess what? Most of them recover. What happened to Ebola? What happened to Zika? What happened to SARS? All these big, mind end of world type of diseases that have impacted us in the last 10, 15, 20 years. Did we ever find a cure for Ebola? Not to my knowledge. Did we find one for Zika virus or what, any of these other viruses, the mad cow disease? Whatever happened? Somehow, some way, shape, or form, again, they just fall by the wayside, and the threat level just decreases substantially, and you learn to live with it. We still have the flu. We get a flu shot every once in a while. Could we get a COVID shot every once in a while in a few years? Sure. But is it warranted enough to come to grind the economy to a halt yet again? Only time will tell.
Good comments. I concur with you on that. It's kind of like, and at some point, if you consider the diseases that have been around forever, malaria, measles, it's like, well, yes, they're fatal in some cases, but we've just assimilated that into the risk of living.
Right.
And so I guess there's a huge premium in the fear department paid for novelty, where
Right.
something's a new threat, and because it's new, it's more threatening than the known threats, which
Very
is
well
kind
said.
of, I guess, a peccadillo of the human character would be the best way to describe it.
Very,
But
very well said. Very
yeah.
well said.
Okay, Adam. Well, so sounds like we're as investors, we are best served by a level-headed, connecting the dots continuously by listening to a survey of the available information and drawing your own conclusions. But it sounds like for the most part, we should be looking forward to a gradual recovery broadly in the whole global economic stage, is what I'm hearing from you.
Yeah, and that's what we're seeing so far in the earnings. I mean, so far, the bulk of Q2 earnings have been released, and we still more companies are coming out over the next month or so. But we're in the third quarter now, and we're looking for the fourth quarter. Will it be a robust shopping season for holidays? Yeah, time will tell. We'll find out. Will a lot more of these stay-at-home stocks continue to benefit? Sure. Even if we get back to quote unquote normal, what does that look like? Millions and millions and millions of parents have to decide what to do with their kids in the fall going back to school. And I'm one of them. I have two young kids that are both in elementary school, an 8-year-old and a 3-year-old. What do you do? Schools are saying, well, over grade 4 and higher have to wear masks. Well, under grade 4, no masks. And other schools are saying masks everywhere. Other schools are saying you're going to put a hula hoop around the kids or a piece of tape on the floor so they stay social distant and they don't get too close to each other. Well, which is it? And not only that, what are you going to do if there is a quote unquote outbreak in some of these elementary schools, and not just the colleges or universities, but really just everyday schools? Then all of a sudden they shut the schools down again. And then what? And then how do you work from home and have to deal with daycare or watching your kids and so on? And so it just becomes that snowball. So for now, I'm optimistic. I think things are getting better. There's no question. I believe the worst is behind us, but I am prepared for any scenario that may unfold.
Okay, as we should all be. Adam, let's leave it there for now. That's great input. I really appreciate your time today. Thanks very much for joining me, and we'll see you at the round table on Monday.
Sounds great. Thank you, James.